we're checking about the continuation of a trend. So if you go to the chart, guys, continuation, this is all about the continuation. Sorry, the continuation. So let's go to the chart. We do about this. Let's go to the chart and do about this. For us, we'll be trading so much gold. We'll be trading, our main focus is on gold. So if you check out gold on the daily time frame, on the higher time frame, so if you look on this market, we are still in uptrend. We are still in uptrend because the market came in did what? The market came and tested to this 50 MA. So it means that you can see the market closed with a.
Okay, one chat.
Okay, can you see the chart? Okay, let me share. Yeah, and kindly guys keep on communicating so that you don't find yourself left behind. So let me present the screen. Let me do this. The windows. Okay. So I believe right now the chart is visible. So this on the daily time frame, we are still in uptrend market. So that's why you say that if you move from the daily time frame, you should go to the H1 time frame. So this is the H1 time frame. So the H1 time frame, are we in uptrend? Are we in a downtrend? So that's why we talked about number one. We should check what? We should check the higher highs and the higher lows. So you can see initially the market was in a downtrend. So then the market is trying to do what? The market is trying to do what we call the higher highs and the higher lows. Right now you can see the market did what? The market came in the broke below the higher low. So this is what I'm talking about, the change of character. Are you seeing this? This is what about the change of character. So but for this one, the general trend of the market is it doesn't buy. So but for this one, you can see what? You can see the market came in the block below the higher low. So it means that the market is trying to do what? The market is trying to give us the lower low. So let me do a bit of this so that we understand. So number one, you should check the trend of the market. So daily time frame, we're on the buy. If you go to the H1 time frame, the market is trying to do what? The market is trying to give us the higher highs, the higher lows. But if you go to the golden crossover, this is when you could see some of people we get confused about the golden crossover. So the golden crossover is these lines crossing each other, the 50 EMA, this one, and the 200 EMA. So it means that if the market is below these EMAs, we do what? We look for the sales opportunities. We look for the sales opportunities. So as you can see, like tomorrow, what are we expecting? We'll be expecting for sales all the way to the 800 EMA. So now we say that, guys, if you see that the golden crossover, the market is just confusing you, you just go to the trend central. So we'll be talking about the trend central in a few. And yes, if you find yourself having the challenges of identifying the trend, you can rely on the trade central. On the trade central, this is a tool. This is a tool that we normally use it on our advantage. Don't know why my account is being frozen. Okay. So, but it's running. Don't know why it's being freezed. So, but yes,
Hi Tim, how are you?
I'm doing good.
I came late. Hope you're recording.
Yes, the class is being recorded. Yeah, the session is being recorded. Okay. So we are talking about how to identify. So I don't know why this account is being freezed, but my side, okay. Okay, but I believe you can see it. I believe that the chat is visible. Okay, should I share the entire screen? Let me try to share the entire screen. Okay, so I was talking about should we go to the training view because but imeshakuja. So right now it's doing very well. So we're talking about checking the trend of the market. Number one, we talked about the structures. Number two, we talked about what? Number two, we talked about the golden crossover. Number three, we talked about the trend central. So I was in the part of the golden crossover, and the golden crossover. This is when you see this market causing each other. So if you see the market below this one, and just know if the market you should expect to see it below this one, you should expect to see some continuation of lower lows and lower highs. So, and that's why yesterday we introduced on the tool called the Fibonacci. We introduced on a tool called the Fibonacci. You know, if the market, if for us, we could be in a strong sell. This one, we could see the market. You can even have a trend line. You can see. You can even have a trend line like this. You can see. So, but for you to draw the trend line, you can go to a line chart. So for this one, I'll be going to show you. You can go to a line chart. You can see at this point we have a candle, we have this one bar chart. So we have the line chart. So for the line chart, you come and highlight the timing of the sort. So don't try to manipulate your trend line. Should at least touch 2 points, like mine. So where's my first point? So my first point could be at this point region. So then the second region could be where? The second region could be here. So timing of the sort. Sorry. Timing of the sort. Or even you can decide to do what? You can decide to come and have your trend line. So you can even come and have your trend line at this point. You know, you can have your trend line at this region, like this. But it should at least touch 2 points, not minimum than 2 points. So at least 2 points, but not more than three. So if you check on this one, because for this one was a perfect one, because we can see for this one the market was making the lower highs and the lower lows, the lower highs and the lower lows. So then you see the market came and did what? The market came and blocked that trend line. So for this one, it could signal what? For this one, it could signal that the market is trying to change the trend. So I'm going to show you that in a few. So that's why for me, you can see that whenever the market's trying to do the higher highs and the higher lows, for me, I could expect to do see what? For me, I could expect to see the market trying to change the trend. So, but generally, where the market is right now, you can see that the market, you know, for the some of us SMC guys, they talked about these chart patterns. They talked about this one. They talked about that one. This is the left shoulder. This the head. So this is the head. Sorry. So this is the head, and this is the right. This is the right. This is the right shoulder. So you can see. So that's why tomorrow, what is the expectation of gold? So expectation of gold will be expecting for you to sell all the way to the 800 to the 800 mm. So, but that was not what I was about to talk. But at least by now understand how to check the trend of the market. For this one, I'm going to do about the practical part of it. We're going to do the practical part of it. So yesterday, we were checking about the reversals, and we talked about the W patterns. So if you check on this one, sorry, let me try to remove all the drawings. Let me try to remove all the drawings. Template. Let me have this one. Okay, so yesterday we introduced about the trap M and the trap W. So if you check on this one, what type of W is this one? For the people who have attended yesterday class, what type of W is this one? What type of W is this one? So as we continue with the session, you're going to just check the market in a different perspective, guys. You know, many people are used maybe to be drawing the trend line, and here and there, they have the indicator. So as we end up the session, guys, or as we end up with the mentorship, you're going to be looking the market in a different angle. So that's why for me, you could see that right now I could identify this head and shoulder pattern. So like a person in the morning could come and do what? Could come and highlight this area, and that will be a sell all the way for this one. But for us, we have the strategy of the 2.6. So you could have taken the advantage of that. So maybe for the people who attended the yesterday session, guys. So can you hear me, guys?
Yes, we can hear you.
Okay, I believe you can hear me on your end. So maybe for the people who attended the yesterday class, what type of W is this one? The type of W, is it extended? Is it normal W? Or is it a trap W? Yes, maybe you can hear me.
W.
Yes?
Trap W.
Yeah, these are trap W. So, but if you see it moving from this region to the next region, we usually call it multi-day W. This is what we call the multi-day W. So we have sometimes on minute 15, you're going to see the W. You see a W minute 15, we should talk about the the extended or even the. So for you, just tell me that these are not a trap W, multi-day trap W, something of the sort. So then the next one is talk about extended multi-day W. So then you have the multi-session. You know, whenever you have in between the session, we talked about the multi-session. Then we have multi-day, and sometimes we're going to see the multi-week W. So, but in the meantime, just know about the just know about the W. Just know about the W. So maybe if you go to another day, let's highlight these W's and M patterns. Let's go to another day, like even today. Can even go to today. You tell me what types of W was this one? What types of W was this one? You know, you guys requested that you'll be doing the practical part of it, so that not to be on the so much on the theories. So if you check on this one, what type of M was this one? What type of M was this one? Yes. What type of M was this one? Was it a trap M? Was it an extended M? Or was it a normal M? Someone else. Yes, yes, yes. Which type of M is this one? Maybe a different person. A different person. Was it an M, a normal M, a trap M, or an extended M?
Trap M.
Yeah, a trap M, a trap M. So very nice. So let's go to another one. Let's go to another one very fast. Let's go to another one very fast to identify these types of M. Very simple on how to go about this. Very simple. Like if you check on this one, so maybe you can tell us what type of M was this one. Was it extended? Was it a trap M? Or was it a normal M? Like for this one, you can see, like for these things apply. All of this, like for me, I usually say that there's no strategy that's bigger than the other. All the strategy are the same. As long as you get a good entry, you're good to go. You're good to go. So types of what type of M is this one? Another person. The type of M is this one. Is it extended? Is it multi M? Yes, multi day. Or is it a trap? Yes. Is it extended, trap, or a normal M? Yes. Very simple. Maybe a different person. Yes, 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 yes. Is it complicated, guys? Maybe you can. I can hear from you guys. Is it complicated? Is it multi-day or a trap on this one? Is it extended or trap? Yes, yes, yes. Maybe a different person on this. Hello, hello, hello. Are you there?
Kim, you are not looking at the messages.
Am I breaking? Trap M. Okay, sorry. So trap extended. Okay, sorry for that. Okay, trap. Okay. So I can see maybe most of us are not in a position to talk. Okay, so that is it. Okay, so maybe we can identify another type of M or W. So I want us to stick to this so that we should know where should we engage ourselves. And that's why for me, when I came across with this 2.4 strategy, so these are one of the element that I was looking on. So looking at this one, what type of W is this one? Is it extended? Is it a trap? Is it normal? Or you don't know? So for this one, what type of W is this one? Yes, maybe I can see many people speaking on the chat box. What type of W is this? Is it extended? Is it okay? Is it trap? Is it a normal W? Okay, normal M. Okay, this is one talking about normal M. Okay, normal M. Okay. Okay, 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 okay. Extended what? Okay, okay. So extended. Yeah, this is an extended W, and the people are saying that is a normal M. For the people are saying that is a normal M. Okay, so this is a W, guys. This is a W. This is not an M. So this is a W. But I think we're going to do a recap of this. So if you are not followed on our yesterday class, kindly go and do so that you should identify. I should know how to identify the M's and W's. For this one, is a W. Is an extended W. So let's go to another one. Let's go to another one. Suppose you're going to see a W or M, maybe having an extension, or even having a trap, or even having binormal. So sometimes you're going to you see extending maybe into different days. You can see for this one. So these are like yesterday, then today. So these are two different. These are two different days. Okay, I'm going to show you how to do the separation of the days, the weeks, and the months from this chart. Okay, so maybe we can go to a different one, a different types of W. You know, many people are knowing the extended. Should we go to the trap? We go to the trap, or even a normal M's and W. So let me go to these. Okay. Let me go to these. So if you check on this one, what type of W is this one? What types of W is this one? Let me try to do an extension of this. So what type of W is this one? Is it trap? Is it extended? Or is it normal? Yeah, this one. So I believe my screen is more visible and more clearer. So if you check on this one, so what types of W is this one? Okay, if everyone is going to get this, we are going to the next one. So normal W, another person, Walaji normal. Okay, Trida normal. Okay, don't put yellow line. We see if we will see them. Okay. So normal. So every one of us are saying this is normal. Okay. Any other person? Is it normal? Is it trap? Is it an extended W? Okay, so for this one, guys, for you identifying this one, for you to identify this one, you should do what? You should at least, I can see many people have not gone through the video, the yesterday class video. So, you know, the very simple way to do or to check on this one, you should come and check on this law. You should come and check at these laws. Are they the same? Are they the same? So you should have a horizontal line. So if you check on this one, come and highlight this region. If you come and check on this apex, this one, and even if you come to check on the next apex, you can see there are two different apexes. You can see. So you can say it is a normal W at some point, but for this one, if you come and look on this low and this low, you can say that it is a trap W. So for the extended one, so let me do a summary of this. And I can see many people yesterday maybe did not understand about this MSMW. It's a very simple session. Yes. Because if we proceed and we don't understand these sessions or understand these Ws, we're going to find it difficulty at some point. So if you check on this one, you should come and highlight on these laws. Come and highlight on this law. If these laws are the same, this one is a normal one. This one is a normal. This one is a normal. The same applies on M patterns. If you see these points, or we talk about the apex. So for this one, if you see these highs are the same, that is a normal. Number two, we go to an extended.
Sorry,
Number two,
Kim, we can't see what you're doing. We can only see those dots, color yellow, blue dots. We can't see what you're doing.
okay, sorry, let me go back to represent this, and that's why at least guys you should be talking. So I want you to be just engaging. So for this one, you can see these are W. This is a W. This is an M. You can see. So I was talking about that. If you come and draw horizontal line, you're going to see this point being the same. These lows being the same. The highs being the same. The highs being the same. So this one we're talking about a normal W and a normal M. Number two, we go to the extended. So extended W look like this. So this extended W look like this. It has made an extension below like that. So we go to an M. An M look like this. An M look like this. It has made what? It's made an extension above like that. So this is what we're talking about. An extended M and W. This is an extended M and W. This is an extended M and W. So at least by now, I believe everyone has a trading partner. You know, these are the things that we're going to do together. This is an extended M and W. So at least that as we proceed on, we should be able to engage ourselves. I want us to start as early as now to at least have a trading partner. So the moment that we come to the session, at least we know about this. So you can see for this one has extended below, for this one extended above. So this is an extension or extended M and extended W. So let's go to the other one. It's called the trap M's and W. So the trap look like this. The trap look like this. This is the trap. You know, for this one, the sellers are being enticed to enter for the sales. They are being trapped. So for the sellers are being trapped. So for the sellers, they see the market, yes, has been selling, comes back to this region. They get enticed to sell before they realize the market has done what? The market has bought. So this is an extended W. When it's come to M, when it's come to a trap M, when it's come to the trap M, look like this. So this is a trap. This is a trap M. So this is a trap W. So for this one, for this one is a trap M. So like that. Very simple. And that's why if you go to the chart, you can do what? If you go to the chart, you can see things are aligning. So this is the chart. Let me share again.
Excuse me, Kim.
Yes.
So, in a nutshell, can we say that normal M or normal W is the same thing as equal
Mhm.
low and equal highs?
Yes, it is equal.
Equal. And why the extended W or extended M, we can say situation whereby the price failed to grab liquidity, low liquidity, or failed to break the high or failed to break the low.
When talking about these, if you come to the, yes, you can even use the liquidities. You can even use the liquidities. But
Yeah,
for
because
us,
I'm just looking for,
Mhm.
like a way to understand it without having to cram extended, normal, or trap. So
Mhm.
when trying to relate it to the chart itself, it's all right.
If you go, you have tried to make it as simple as possible. If you introduce the liquidity sweep, liquidity, uh, you had a sweep, you had a, maybe for the ICT guys, they talk about the engineering liquidity. For us, we just use it to be like a double top and a double bottom. Maybe for the people who have done some a bit of SMC. So, you know, for the SMC, they talked about the double bottom and they talk about the double top. Then some point they talk about the divergence, and they talk about the hidden divergence and the regular divergence. I don't want to go on that side, so that's why I'm trying to do it. I'm trying to do like a simplest way to have an extension, to have a trap, to have a normal one. So three of them, only three of them. But the same applies for the M. Okay, so yesterday we did some a bit of introduction of the Fibonacci tool. Maybe for the people who never attended the Fibonacci tool. So at least today make some arrangement to go through the previous recorded classes, guys. but also at least Levi, you're going to be helping me to be uploading the video. You're going to be helping me to be uploading the video so that whenever we finish the session, you just do what? I'm going to install the AI for you. I believe Levi, you have the laptop. I'm going to install you the AI for you so that you can be helping me to be doing this. It's a very, very simple way to do this. Yes, so that at least we can have the videos on time. So yesterday we talked about the fib, maybe a summary of this one, and that's why it's very, very important that I actually don't miss any session. At least try to follow each and every day session. Even if you're not going to be there, try as much as possible. You can give yourself like you find that videos most of the videos they don't even reach 1 hour. Even if they go surpass the 1 hour, you find that they don't go even to 1 hour 30 minutes. So you can find yourself, you can give yourself 1 hour, only 1 hour, and go through this. So yesterday I'm doing this because I can see some of us yesterday they were not in. So yesterday we talked about the fib. Yesterday we talked about the Fibonacci tool. The Fibonacci tool. The Fibonacci. Some people called Fibonacci. Some people call Fibonacci. Depends on how you call it. Fibonacci retracement. Well, Fibonacci tool is the same. Fibonacci retracement tool. Retracement. Fibonacci retracement. Okay, like that. So for this one, we talked about that. For this one has some digits, and maybe for somebody, what is a Fibonacci retracement? So this is a tool that we usually look it for the entries. For this one is only for the entries. You can use it for the entries. At some point also you can use it for the exit, but most of the time we usually use it for the entries. And that's why for this one we talk about being a tool that has the arithmetic series and progression. Arithmetic series and projection. Talking about the geometric series and progression. So that's why for this one we see that we have some digit that we look at, and the number one is 23.6. So I'm going to show you 23.6. Number two, we have what we call 38.2. 38.2. So these are the levels that this tool has. Number three is total what we call the 50% retracement level. 50% retracement level. Number four, we have what we call 61.8% retracement level. And number five, we have 78.6 retracement level. So how does that tool look like? So the tool look like let me try to do this. Maybe I should be sharing the entire screen so that no need of going back to share the screen again. Okay. Let me try to do this. Okay. So let me try to share the entire screen. The square screen. Here we go. Okay, so I believe my chart is visible. So if you go to the trading view, and I know many people are used to this trading view. So if you go to the trading view, you're going to find this point you have many tools. So here you're going to find many tools. So you come and select the first one. You come and select the first one. Let me try to give this space like that. So for this one, you can see we have the Fibonacci retracement, the Fib retracement. So if you come and take this Fibonacci retracement like that, you can come and have it like anywhere like this. So some people have some adjustment of this one, and maybe they can have only the three values. Depends on how you want it. So if you go on this one, you can see if the first one is 0.23. So for this one, you multiply by 100 to get in percentages. So that's why we are talking about 23.6. We're talking about 38.2. So for this one, is all about you can talk probability. You can talk about the probability. Yeah, for this one is all about the probability. So 23.6, the next one is 38.2, 50%, 61.8, retracement level, 78.6, retracement level. So, and that's why yesterday we talked about the main ones that we usually highlight. Yesterday we talked about 38.2, this one. We talked about the 50% decimal level, that one, and also talk about 61.8, the decimal level. So these are the main ones that we are going to use. And we talked about that for this one, we want to see it in a trending market. So for market.
Can't hear you.
That
You're breaking up, Kim.
yes. Okay, can you hear me, guys? Confirm that you can hear me. Kindly. Yeah, there's someone calling, and he was calling multiple times. Sorry for that. So there was someone talking. Yes, there was someone was yes, before I left. Was it Nyams or Jackie?
Yeah, I was saying we were not hearing you, but now we can hear you.
So we're talking about this Fibonacci tool. So for us, we want to trade in a trending market. So these are for us to draw these Fibonacci. In uptrend, we draw from the lowest point to the highest point. In the downtrend, we draw from the highest point to the lowest point. Are you together? So then for this one, it means that for my values, we'll be starting from 23.6, going lower. So for this one, my 23.6 will be from lower to going higher. Are you following? So let's go to do this in the practical part. So let's say like today. Let's say like today. Let me do this. So sorry. So if we check on today, sorry. I think there's something not happening. Okay, like today. So if you highlight on this one today, you can just know that before you could have some further sales that you could have you could have come and done in hot. You could have come and done in some of the sort. Come and draw your fib from where? From the highest point So this is the highest point. This is the highest point. To the lowest point, the market went. You can even extend it to be left side or even right side. You can even extend it. So from the highest point to the lowest point, the market went. So to the lowest point was at this point before we could see some further sales. It was that point. So I believe we can see it. This point. So for me, I'm doing an extension. So it is at this point. Sorry, it is at this point. So for me, I'm doing an extension further like that. Are you following? Then for this one, I'm not highlighting on empty point. I'm just highlighting on this high. Are you getting, guys? Just highlighting on that high to the where? To the low. I believe we are falling. I believe for this one, we are falling. So it's become very simple. It's become very simple how to draw this Fibonacci tool. I do get it. You have seen that in a downtrend, we draw from the highest point, we draw from the lowest point to the from the highest point to the lowest point the market went. So it'll be something of the sort like that. So if you come and check on the market, where did the market reverse? The market came in reversed where? The market came in reversed on between 78.6 and 61.8%. It's the same level. So where could be your entry? Where as a trader, where could be your entry? Your entry could be at 61.8. Your stop loss could be where? 78.6. Then where are you going to mark for the take profit? Take profit will be here. The take profit will be on this low, because for you're expecting the market to come back to this low. If you are expecting for continuation of a sell, so expecting for the market to come and give us a new low. So maybe your exit point could be at this point. Are you together? Yes. I believe we are following. Maybe in an uptrend. So like today, what are we expecting on the market? So if you expect it down below, so this market can see had been head up by 38.2. So we can see that the market is trying to do what? The market is trying to do the lower highs and the lower lows. So I'm going to give you the combination of this one so that you can even use the trend line. So you can use the trend line from that point, you extend it further like that. So it means that for us, what are we looking for this one? So for this one, we are not going to the trend line, but I'm going to show you how you are going to combine it on our advantage. So like for us, we're coming to check on this one to be the first touch. This one will be doing it as the first touch. So we're going to be doing the second touch at this point. This will be the second touch. So where are we waiting for the market to come tomorrow? We're waiting for the market to give us the third touch. We're waiting for the market to give us the third touch. Then we do what? We continue for the sales all the way. I do get it. So, but I'm going to show you how to do the analysis of these ones. Now, just check on the Fibonacci tool. Are you together? So just check on the Fibonacci tool. So let's go to an uptrend. Let's go to an uptrend. How do we check an uptrend? Where the market went lower. Where the market went lower. So we draw our fib from the lowest point to the highest point. So let's say before you could have these let me try to do this. You know, we usually see people doing these mistakes whenever it comes to the back testing, that they already seen what the move is going to happen next. Then for them, they just come and do buys. But whenever they are going to do it in the right markets is where they have the problem. So it's much important that you have at least of I would say that it doesn't give you these all these features. So like for instance, before you could have these other continuation of a buy, you can highlight your lowest point the market went. This is the lowest point the market went to the highest point. For this one, I know many people are going to get confused because they're supposed to tell me that I should come and check on this highest point there and come and check on the rest. But for us, we are trying to look for the entries. For us, we want to look for the entries. For us, we don't already have this one. So for us, we already have this one, and just know for this one, is where you could see the markets making the lower highs, the lower lows, lower highs, and lower lows. And for this one, you can see the market starting making the higher highs and higher lows. So for us, we're expecting the market to give us a higher low. So if you come and mark your lowest point, the market went to the highest point that the market is, like that. Sorry. So if I do an extension like that, for me, I want not to be like that. I want to extend it so that you can also see on your side. So if you mark that region, so you'll see that for us, we just focus on where? We just focus on the 38.2, 50% retracement level, and 61% retracement level. So where could be your entry point of this one? So you can see the market came and reversed with the 50% retracement level. I don't get it. The market came and reacted with 50% retracement level. So that's why this region, you could do what? You come and take the advantage of the 13 EMA. The market breaking above the 13 EMA, you do what? You enter your buy. And for you do what? For you, if the market goes on your favor, like the market come and broken above these higher high, you just go directly to the H4 time frame. Just go directly to the H4 time frame and do what? Just go to the H4 time frame and try to highlight that structure. Because you can see for this one, this was a structure, but for this one it was a swing trade. But I did not share with you guys because of last week how the condition of the market was. Because of how the condition of the market was. Yes. So that's why I could not share this trade, because I don't want to see my student blowing the account. As a mentor, if you're helping your student to blow their account, it means that you're not mentoring them very well. So that's why even this week, even for me myself this week, can recall, like, for me after did less than 5 times. Just know about that. That for me, because of the market condition, I only traded about 5 trades. Maybe tomorrow I'll be getting the sixth trade, but because of the PIV value, and the condition of the market. So this is how to draw a Fibonacci tool. If you are buying, you draw from the lowest point to the highest point. If you are selling, you draw from the lowest point. You draw from the highest point to the lowest point. I believe that is clear. So maybe you can go to, let's do a bit of more practicals on this. Let me do a bit of practicals on this one. Let me do a more practical on this one. Yeah, you can draw it even on the mid 15 to get some sniper entries. But for us, we'll be mainly looking it on the H1 time frame. So like for instance on this trade, so let's say at this point, when I'm talking about you mark the high and mark the low, many people are going to ask me, Trader Kim, where did the gold go lowest? Where did it go highest? Such question. So like for instance, let's say the market has been making the higher highs and the higher lows. So for instance at this region, which region should I come and highlight? Should I come and highlight on this one? So let's ask our question this one. Should I come and highlight on this one? So sorry. Should I come and highlight on this one? Sorry. Should I come and highlight on this one? Should I come and highlight on this one? So these are the questions that we should be asking ourselves. Are you going to draw on this one, the lowest point, or are you going to focus on this one? Okay, maybe we can hear from you. So let's mark this one as 1. Let's mark this one as 2. And let's mark this one as 3. So based on what we are talking about, if we draw our fib from for an uptrend, we draw from the lowest point to the highest point the market has moved. So where should we check? Where should we highlight our lowest point? Maybe I can hear from you. The first one, the second one, or the third one?
Number 1.
Number 1. Another person? Yes.
Number 3.
Number 3. Another person?
Number 3.
Number 3. 2, 3, 1, 1, 1.
3.
That was 3. 3. So many people are saying 3. Okay, so this is it. This is how to go about this one. This is how to go about this one. You know, for us, we are just interested with the current market price. Just know that for us, we don't want to trade the history, because even if I say that I should highlight your the lowest point the market move, you know, you are even going to go to the 90s. You even go to the 90s to highlight where gold it went lowest point. But for us, you know, whenever you're going to trade the market, you know, for us, we are interested with the current market price. We don't want to trade history. For us, we don't want to be analyst of a certain company. So for us, we want to trade the current market price, the CMP. So if you go to this one, like an example on this one, if you go to an example of this one, so sorry, if you go to this one, so for me, I'll be looking on the third one. Are you together? So just today know about this one. For me, I be interested to look on the third one, because for me, I want to trade the current market price. So let's say the market bought all the way to this region. So I should come and do what? I should come and highlight the lowest point here, the highest point the market went. Like for instance, let's say it went all the way to this region. So like for me, just do some extension, because for me, I don't want to see my Fibonacci like shrinking. I wanted to see it expanding like that to get a very big clear picture. And maybe for the people who ask it, should we use the wick? Should we use the body? You know, those are the questions that maybe you're going to find yourself maybe getting confused. Go and use the wick. Just go and use the wick. Just go and use the wick. This wick and this wick. Sometimes you see people using the body and the body. So, but for me, I will revise on the wick, because the wick also is the part of what? It's a part of the pricing. So for this one, you can see the market did what? The market came and reversed at the 50. The market came and reversed at the 50% retracement level. So your stop loss should be where? So on this one, your stop loss should be slightly below. You see, for this one, your stop loss should be slightly below the other level. Are you following? Are you following? By now, just know about this. We are going to the risk management. So by now, understand how to go about the Fibonacci tool. Okay. So for this one, draw from the lowest point to the highest point. The markets come to the if the markets come to the reversal to these levels, that 8.2, 50% decimal level, and 61.8, you just do what? You just be very careful to get an entry. And sometimes you're going to see the market reversing 23.6. So let's talk about this 23.6. Let's talk about this 23.6. 23.6 also, you can see the market trying to come to this region and start doing what? And reverses at that region. So sometimes, not all the time, it's come to the 38 or 50 or 61.8. So, but in most scenarios on this one, just know that we have some fake outs. So you're going to see some traders getting enticed for a buy. Then the markets come and do what? The markets come and backs go all the way to that 8.2 or 50% retracement level. Are you getting about 23.6? So 23.6, it has a lot of manipulation. So you, for this one, expect a lot of manipulation. A lot of manipulation on the entry. So that's why, like for me, I came and did the research and identified that for the swing trading, I will go with that 8.2, 50% retracement level, and the 61.8% retracement level. Yes, the same applies for the sell. You know, we have done for the many, we have done for buys so much. Let's look for a sell as we come up to the conclusion of the session today. So let's go for a sell. Let's go for a sell. Let's go for a sell. Okay, let's say for this one. Let's talk about this one. So you see that in a downtrend, you have your fib from the highest point to the lowest point. So let me extend it like that. So my cursor is just running. Let me try to have it like there. You just said that we are saying that you do what? You just do it with the week. Sorry. So week like that, like that, like that, like that. Then you can have some extension there, like there. So because for us, you know, we are good on this one. So but you can do what? You can do an extension. So but finally before you could have this one, we had this one. Because if the market came and did what? So you could have this one as the first attempt. The market came and reversed with 30, came and reversed with 38.2. So, but before you could also have that one, we had this one also. The market did what? The market came and reversed at 61.8 retracement level. So like that, like that, like that, like that, like that. So you can see the market came to the 61.8. So if you see the market breaking or surpassing 61.8, just most of the time don't take that trade. I together don't take that trade. If you see it breaking above 61.8 or below 61.8, maybe for a buy, don't consider entering that trade. It will be a fake out. It will be a fake out, and you can find it coming back to where? To this region or to this entry. So that's why for this one, could have done something of the sort, and you could extend it like that. And you can see the market did what? The market came to the 50%. It is mainly for maybe you could have your sales all the way to where? Could have your sales all the way to the previous low, but for this one you can see the market did not reach low. So for this one you could have exited with the break even. Could have your stop loss on this entry. So if it went all the way, never reached to this one to break this low. So for this one, could maybe exited at a break even on this swing trade for a sell. Sometimes you're going to see this market holding like a week, like 3 days, and this is the pressure they're going to experience, guys. I'm going to have many calls. Trader Kim, should we exit the trade? Should we continue holding? So those are the calls that I'm preparing to expect from you guys. That's what we're talking about, the emotions. But I'm going to go a bit by bit, to show you how to go about it. I'm going to show you how to go about it. As long as number one, you have safeguarded your capital. Number one, safeguard your capital. If you safeguard your capital, it means that the rest you just leave it for the market. Just leave it for the market to do what? To give you the profit. And you're good to go. Any questions so far? Yes. Any questions so far?
Yeah, sorry, Kim. Quick question.
Yes.
So on
Yes.
this fib,
Mhm.
I did get the one for 23.6 that we shouldn't go for that. It might be fake out. But did you also say that about 78.6 deeper retracements, we shouldn't go for it? We should only stop at 61.8?
Okay. So thank you. So we say that in the start, we say that we are going to focus on that 8.2, 15, and 61.8. So just ignore 23.6 and 78.6. So just go with these three: 61.8, 50, and 38.2. These two, 23.6 and the 78.6, just ignore them. So because 23.6, we're going to get a lot of fake out, and 78.6, it means that the market could come back to where? Come back to the swing high or to the swing low. You can see it's either way. But if you see the market on the 61.8, 50, that 8.2, most of the time we should expect to see some what? We should expect to see some reversal. Yes. Any other question? Any other question? So guys, tomorrow you're going to definitely tomorrow you're not going to have the class. So but we'll be resuming as from Monday. And yes. So also this week, also I've not traded on your profile, guys. So sorry for that. So but we'll be doing this as from Monday. And this is because of this market condition. As a trader, it's not all the time you're supposed to trade. Not all the time you're supposed to trade. So at least you should give yourself some time. And that's why I told you there's a friend of mine. He was having $3,000 and I was using 0.01 and he blew their account. So that's why you should know a risk on environment and a risk off environment. So that's why for the people who could enter the trade last week on Friday, on Monday, on Tuesday, you could find them blowing their accounts. And for me, if your mind is blowing, just know that definitely you're going to blow the account. Definitely you are going to blow the account. And just imagine, maybe for the past maybe 1 month, maybe the month of January, we had some we had actually 3 swing trade. Just imagine on the latest swing trade that we took was the trade went all the way like 7 days. In 7 days, you could have yourself like 9,000 pips. Just imagine. And for me, I got to top out with 7,000 pips. Just imagine, like that move. Even if you're going to use 0.1, it means that for you, you can even not trade for the next 6 months. You can see. It means that for you, you can even say that the next 6 months I'm not going to trade, and you can see that these profits that you made can cater for everything. So that's why just be patient. Just be patient. If you get an entry, we are going to be trading together. We're going to be trading together, and actually, I'm going to give the best of me. I'm going to give the best of me to ensure that we make it on this class. I told you there's one of the student of mine. Last year, we learned about these things that we are learning right now, and she's doing very well. Actually, these weeks she bought a cup of tea. She bought a cup of tea, and it was a very very big cup of tea. So also on your side, guys, I want you to see, at least to have that progress of at least I want to see my student making it. I want to see my student making it, guys. So maybe having said that, guys, let's call it a session. Let's call it a session, and let's meet on Monday, guys. I'm going to forward you the course outline. I'm going to forward you the videos so that we can go through the videos. So coming next week will be marathon, because we're talking about the fundamentals, coming back to the swing trading, the fundamentals. And you can see, if you're going to miss the session, you're going to find the people are learning the fundamentals. Then you are still on the swing trade. You're still on the strategy of the swing trading. You can see sometimes we're going to find yourself we on the swing trading, and the other people, they learn about the fundamentals. So the same way. So at least I'm going to be posting the video. So Levi, at least you're going to be helping me to ensure that after the session, we edit the video together, and we forward it on our Telegram group. So maybe having said that, guys, so next week we'll be in Nakuru. You're supposed to, I think I have stopped recording. So next week we'll be in Nakuru. We are supposed to be Nakuru this week, but definitely